Today's Money Watch, nearly everything on Wall Street is taking a tumble today amid worries about the U.S. economy. The Dow dropped more than 1,000 points. What does this mean, though? Joining us in studio is Ronnie Thompson with True North Advisors to break down the developments and, of course, offer us a little bit of advice for 401k investors. Thank you so much for being with us.
Thanks for having me.
So we're talking about a drop, but what does that mean to the average American?
Sure. So I think to put this in a little bit of perspective, three indexes that they track for the economy in America: the NASDAQ, the Dow, and the S&P 500. So those tend to be kind of the forecasters. They give us the temperature. We're at about 2.5% to 4%. So NASDAQ is the one that's down the most at 4%. Put that in a little bit of perspective. Black Monday, which is probably the single worst day we've seen in history, the S&P 500 was down 20%. And there were periods throughout COVID where the markets were down as much as 12% in a single day.
Wow.
So it's not as aggressive as I think history points to.
Yeah. What caused it?
Yeah, so I think the big thing that people are pointing to as the culprit is the jobs report on Friday. So they released a jobs report. Unemployment was much higher than anticipated. Jobs growth was much lower than anticipated. But I would say that there's a lot more to this than just the jobs report, right? There's been a lot of things going on that I think has chipped away at investor sentiment and just confidence in the markets and the U.S. economy as a whole. And I think there's a couple of factors there. One is the inflation. Things are very, very expensive now, and that's starting to find its way into some of the necessities that people are struggling economically. The other piece to this is Fed movement, which is going to be effective to how they're dealing with the inflation aspect of things. The Fed announced at the end of last year that they were going to lower rates 6 to 8 times this year. That got priced into the stock market, and they have not lowered rates at all this year. And so I think there's some of that uncertainty that's going on, and of course I always say where America goes, so goes the world, and so this has affected not only America but globally as a whole.
Yeah, every household I know it's definitely impacted, which we hear now recession often. Is that just a buzzword, or do you think that we're headed in that direction?
Sure, yeah. So we call it the R word. Nobody likes it, right? So recession is unique in that most people hear the word recession, they think about things like 2008, the tech bubble in 2000. It really gets them concerned about a significant drop. Am I going to lose all my money? Am I going to lose half of my money like I may have in those times? Believe it or not, recession cannot always be a bad thing. I think what people need to realize is the Fed was raising rates so aggressively in attempts in part to get us into a minor recession, because that helps bring prices down and really kind of expedite some of these economic issues as opposed to just letting them kind of work themselves out. So I don't necessarily think recession is a bad thing, but I don't necessarily think we've headed into a full recession. I think the signals now don't necessarily say that, but certainly news cycles and so forth will suggest recession because it creates that fear and in turn some of that attention that people are seeking when it comes to having these conversations.
Yeah, and before you go, give us a little bit of advice for those of us at home who now are worried about this.
So I think first and foremost, what I tell anybody I work with is don't freak out, right? It's one day. We've had days like this before. Give it a chance to kind of settle out. Some of this is sedimentary, meaning people are very nervous, so they're selling off. And then when they see in a week or two that things aren't as bad as they anticipated, they'll come back into the market. And I've often said, there's a saying, those who stay will be champions when it comes to the markets. Those who know that they're set up correctly, make sure your risk tolerances are correct, seek out a professional that's going to help you identify your goals and objectives, and stay the course is always the best option.
All right. Well, thank you. I'll take your word for it. I'm one of those who's scared.
Absolutely.
So.
I get it.
All right,
Ronnie
Thompson, thanks so much for being here.
Thanks for having me.